Price doesn't move randomly. Every move on the chart happens because of one thing, an imbalance between buyers and sellers. In this video, I'll explain the simplest way possible why price moves and how supply and demand controls the market. Price goes up when there are more buyers than sellers. Price goes down when there are more sellers than buyers. If more people want to buy gold than sell it, price has to move higher to find sellers. Feel me? Brief explanation on what makes price go up or down. Let me explain it simpleton terms. When there are people in the price and when there are people in the market and they are content with where price are at, that's when buyers step in. You feel me? What they do is they say, hey, I like this product right here, and $20 is a great price for it. Let me buy it. And when 1,000 people buys it, that makes the person who made it say, hey, maybe a lot of people want this, so 20 bucks might be too cheap. Let's raise it to 25. You feel me? If people are still liking the price, they say this is useful for 25 bucks, they continue buying it. Indecision in the market is when buyers and sellers do not come to an agreement. They're steady fighting, wanting to push price up and wanting to push price down. And with that, you get ranges like you see on the chart. What is a demand? Demand is an area where buyers step in aggressively and push price up. When price is falling, buyers entered strongly, sellers couldn't keep pushing down, price exploded upwards. That's what a demand basically is in definition. Demand creates a strong upward move. So from here, price came, pushed up. Matter of fact, let's draw. Price came, pushed up. Right? Price then came to the area of origin where it pushed up from. Right? Somewhere here. And now it popped up again. Right? Price then retraced or pushed down back to the area of origin to then rocket up. Every time price comes to the area of origin before making an aggressive move up, it's called a demand. Feel me? Demand zones. Whenever price comes down to an area and rockets up, that area becomes demand. Why does it become demand? Becomes demand because people wanted to get in there but hesitated, and now we've left big money behind and we have to come and get them. The aggressive movement that happens out of these areas signifies that we have grabbed big money and it was big enough to make price react aggressively out of this area. What is a supply? Supply is an area where sellers step in aggressively and push price down. Price was rising, sellers entered strongly, buyers couldn't keep price pushing up, price dropped fast. Supply creates strong downward moves. This is the exact opposite of the demand. But you see, price is dropping aggressively. It then rallies. It rallies with some type of strength, but as it gets close to the demand zone, it begins to slow down, right? Touches the demand zone and immediately takes off. Same thing, comes back, area of interest, touches the demand zone, aggressive flushing. With this one, price comes in, slows down to the area of interest, aggressively flushes. These are areas, like I said earlier, price left big money and we had to come and pick up big money. You understand? So that's why you get an aggressive reaction that happens when price touches these demand zones. I mean, these supply zones. Imbalances equal explosive moves. When one side is much stronger than the other, price doesn't move slowly, it moves fast. That fast move tells us where supply or demand was strong. How does this connect to structure and levels? Market structure tells us direction. Support and resistance shows us where price reacted before. Supply and demand explains why price react. Alright, right now I want to show you guys a few examples of some supply and demand setups. So now, this is in a sell trend and it looks like it's about to start buying, or it's a temporary buy trend. Aggressive pushing up, price came back into the aggressive push up, begin to push up. Aggressive push up, price came back into it, pushed up again. Of course, this is another one. Now some sells. We came here, we pushed down, we pushed up, aggressive push down, we came back into it, this whole candle here, and then we pushed down aggressively again. We have another one. We came up, we pushed up, we pushed down, we pushed up, pushed down, came into here, pushed down again. Aggressive selling, come back in, drop. Same here. Aggressive selling, came back in, dropped. Aggressive selling, came back in, soon as we got in, rejected, drop. And you can find these all over the market. Came in, dropped, dropped, dropped. Simple as that. And that's how you're going to find what you're looking for. This is Euro USD. You can find this on gold. You can find this anywhere. Once you understand what market structure is, then knowing how to find supply and demand will become a lot more easier. You're seeing a lot more, supply setups here because we're in a sell structure on a higher time frame. But if this was a buy structure, you would see a lot more demands. Price moves because buyers and sellers are fighting for control. When buyers win, price rises. When sellers win, price falls. As you can see with the charts that's in front of you. The strongest moves happen when there are imbalances in the market. Do you want the next video to show how I mark up supply and demand zones step by step? If you do, let me get like 10 likes on the video and I'll go ahead and show you guys. Peace.